Welcome to the Money Collective podcast. We're here to uplift your financial well-being. Your hosts are me, Mel Pearce, and Darlene Yu. We are the co-founders of the Money Collective, and together we have over 50 years of finance and banking experience. We provide the tools, information, and guidance to better understand your money and feel confident making money decisions. Hello.
Oh, welcome to episode 8.
How you doing, Darlene?
I'm great, thank you.
That's good. So episode 8, lots of things to talk about today. But first of all, let's
Talk about our truth today.
talk about clothes.
Oh, it's
What's
very
the
triggering.
Jeez.
I just think clothes is the thing. That is my vice, right? So
You love clothes.
I don't drink very much. I don't smoke.
Save it all up for
I don't
clothes.
go eating out. But
How big's the wardrobe?
way too
We
big.
should be doing a roving
Yeah, you can actually see my wardrobe.
podcast. Looking at
Yeah, I could, absolutely. That's right, it is triggering. I do like the idea of, clothes and colour and stuff, so I enjoy it, but then,
Why are you worried about it now?
well, I just have too much. It's
Okay.
just... And what do you really wear in your wardrobe? You wear the smallest amount. I don't know about you. You have what? I don't know. You have 6-10 outfits. I don't know. I just...
Totally. I wear the same things all the time. Yes.
That's how the brain works, I reckon.
Okay.
And then that's enough. I like
And
the
then I
idea
either
of
get-
lots of choice, but how often
Then
do
I
you
get
really
sick
use it?
of whatever I'm wearing,
Yeah.
or it gets worn out, or I've got too many stains on it, something
Yeah.
like that.
Yeah.
And it has to go.
Yeah. So, so how much money in the discretionary budget spending on clothes, and does that mean what is your trade-off as well? Like,
That's it.
So, if you're spending $10,000 a year on clothes, that means that $10,000 is not going maybe towards something else that you might value more. So
That's it.
that is the question,
Yeah. Well, yes, clothing. So we've got lots of things that are coming up for us as a business. So we're out and about a lot. We're actually going to an awards night tonight because we got we're finalists in our local business awards.
Yes, that's right. The Professionals Award for our
Professional
council.
services for
That's right.
Yeah, in the Maroondah catchment
Council?
area. That's
Yeah.
it. So we're heading off tonight. Have you got an outfit?
Oh, so it was like, because I just didn't really want to think about what to wear. And they're calling it a gala event, right? So when you call something a gala event, what do you think? Sequins, long dresses,
I take my lead
shoes?
from you because I remember
No.
you took me to a black tie event and I didn't understand what black tie was, and I
Okay.
regret that. My
I
dressing
recall that.
decisions.
What did you wear?
I wore this cheap little short dress made out of a suede material with stockings underneath. Oh, it was horrendous, and everyone had ball gowns on. And I'm like, there's like Oscar de la Renta.
Okay, so we're scarred, Mel. I can't remember the outfit. It washed
bad.
over me.
It was probably $40.
Yeah. And this is the thing, actually. That's a really relevant point, because when I think about clothes and wearing, I suppose you do sometimes look at somebody, admire what they've got on, but most of the time it's not, maybe. I don't know.
Oh, yeah.
I don't know. It's a good question.
I do walk around the shops going, oh, she's looking good,
you do.
I do. I'm a
I
judgy.
suppose I do.
We're lying if we don't judge.
Yeah, it's true.
We're judgy.
Yeah, we do a bit. Yeah, so, yes. So, no, I've decided. So, at the beginning, on the weekend, about Sunday, I started to think about it, and I thought, oh, what am I going to do? No, it's all too hard. So, then I started, obviously work this week, and I thought, oh, if I get time, I might go and look for something. But then, actually, I think just by talking to the team, and I thought, no, I'm not going to do
Because
that.
it hadn't even crossed my mind to go and do that. People said, what are you wearing? And then I go, what have I got?
I know. Well, I just
Hang
was
on,
thinking,
what
oh,
fits?
it's-
Because like my
that is a problem.
my
too.
catalogue of dresses is in a size that I no longer am.
Yes, that's a problem. I think that's a lot of the reason we don't also want to look, because at the moment I'm also more than I've ever weighed, and I don't want to go and buy a new wardrobe. I want to get back into the old
This is
wardrobe,
so
right? Because really, if you dig deep, this is really the problem. Anyway, so I thought, no, I can make do.
I've let go of those hopes and dreams.
So
I'm keeping them for friends and children.
Yeah. Mind you, I did have a win the other day. My daughter Lily, she has got her grade 6 graduation coming up, and first of all, I'm much older than her, and she always thinks I'm really old. So I was super surprised and excited about this. I had an old, space bag full of dresses, and she was mentioning what she might want to wear, and I thought, I might have a dress like that. So anyway, I opened up the space bag, went through the dresses. She didn't pick that one. She picked another one that I'd never worn, but I could fit into 5 years ago. And she decided she really liked it, and she's going to wear that, which is, anyway, that blows my mind. Anyway, so knowing my daughter, it blows my mind. So, that was a bit of a win. I didn't have to go out and spend a lot of money on, grade 6s. You feel like you shouldn't have to spend the money. By the time you buy shoes, do hair, makeup, dress, adds up, right? So that was a little win. Anyway, but tonight, no, I have thought about what I could wear, and I'm just wearing like a cocktail short,
Out of the wardrobe?
Yes.
Out of the wardrobe.
Out of the wardrobe.
Out of the wardrobe.
So that was a win. That was a win. And we've got, it's this time of the year, so we've got things coming up. So no, I don't plan to buy anything.
Do you want to know what? What? I bought something.
Oh, because I got the gist when I talked to you on Monday. That was my inspiration to go to the wardrobe.
I see what I've done to you. Mind goes. But I bought it from an op shop.
Oh, I love op shopping. And I haven't done this yet, but I
so
really
we went to a fancy
inspired.
area. So me and my daughter Tilly, we both love op shopping. It is a passion of ours. And oh my God, I love her so much. We're going through the racks. We went to Savers Ringwood first because that's a really good
go
tip.
there.
Anyone who lives in our area. We're going through the racks, and we've they give you trolleys. So we do love our clothes as well. All right, loaded it up, and she's like, "How much?" And we spent $80 for a trolley worth of clothes. Oh my God, it was so good. And we're like, "How much?" She's like, "How much do you think this was?" And we're like, "It's got to be close to $2,000, like if you bought it all new, like all this stuff." And I was so I've had a few new shirts out this week, and then after that we went to another op shop because we've got some corporate things coming up, and I have been so struggling because Darlene has said to me, Mel, maybe we might need to present a little bit more pleasingly and
to corporate
and
companies
play the part a little, and I'm not very good at playing the part nowadays.
That's right. And really, should we have to?
You've shaken it out of me, and now I'm having to go back.
We shouldn't have to. It's against our value stream, but we also want to get in the door.
That's it. So anyway, I thought, let's go to like a fancy area. I might get some nice shirts and things. And that's where I picked up. So you'll see it tonight. And if you follow our socials, we might get a photo of what we're wearing. But I've got a shimmery black sequin top.
And Darla. What I've got is
black.
not Darla.
I don't know what they're called, but it's like pleated, black, nice, like they're
ruffles,
culottes.
Oh,
but it looks like a skirt type thing.
It's like a jumpsuit. Is it
not a
one
jumpsuit?
piece?
No, it's a top and a bottom, and some shoes I dug out of the cupboard. So that's what I'm wearing.
Good, yeah. But I mean, like op shopping is really the thing, right? It's great. So I've been talking about getting on.
She's been talking about coming. She thinks it's great, and just
I do love it. I love the idea. I just
she loves the idea. She just hasn't done it. This is great. I'm like so glad that we're going to go through this journey together, and this podcast
we're gonna do it.
One day.
Yep.
That'll be another one. We could do a live podcast from the op shop. I love it.
Oh, let's do that.
And this is another thing that I like about the op shop because.
And we're doing something good for the
because you're not following trends in that when you go in there, and it's this vision for yourself again. You've got to be true to yourself and go, well, hang on, what's my style? Because you can find some really funky stuff in there where you kind of got to go, well, I'm going to own it. Like that's it,
great.
And it's not just stock standard of what's in
the
fashion.
shops.
So you're either going back in fashion or being a weedy poo,
or just being you, which is awesome.
Well, yeah. So it's fun.
Yeah.
Anyway.
Yeah. No, that sounds really cool. And it's all about life values, where you want to spend your money, And so I hope you've got something out of that, and you can save some cash.
Yeah.
That sounds, I'd
That's
like that.
So anyway, other than us loving financial wellbeing, clothes and makeup, we are also mortgage brokers.
We are mortgage brokers, and
that's been a journey for us too.
Oh yes,
hasn't it?
It has been.
And we
a journey.
realised that we weren't even proud of being mortgage brokers because we thought we were used car salesmen.
Well, this is the thing. Actually, I am on a so the Mortgage Finance of Australia is like our industry association.
We call it the MFAA.
MFAA.
It is the leading body in Australia for mortgage brokers.
It is. So you're like part of the industry association, and they advocate and support, us. Yeah, as an industry.
Yes.
So I am on the committee for the Victorian arm, and to represent brokers. And we are just trying to actually work through what our charter should be, our new charter. And it really is helping people understand the value of brokers and lifting brokers up. So the purpose that's been put out there and consistently is that we want to lift that view of what brokers are up, not. I feel bad because we're using used car salesmen. They might like to feel lifted up as well.
Yeah, that's right. Sorry to the used car salesmen. We love you guys.
But mortgage brokers are in that, that feeling of, what's
just trying to sell you something,
very
make
transactional.
A lot of money. Oh, they don't care. They might not even answer my phone call or yeah.
That's right. With really the agenda of lining their pockets.
That's right. They are, or that mortgage brokers make a lot of money, which is not so much the case nowadays. It's definitely tough.
That's right.
Well, to be in that case, but I would say I have been in the mortgage broking industry for the last 20 years. And I've seen it change and grow, and I'm really proud to be in here. And that's even hard for me to say. Like, I can feel that in my body. It's like, am I telling the truth? You know what I mean?
Yeah.
Because I probably would never have chosen that to be an occupation, to go, right, I'm going to be a mortgage broker.
I've known Mel for a very long time, and that, I feel, is one of the most truest things I've heard her say about this before. So it feels true.
Yes, and so I've just done it. But then I now believe that we can bring passion and ourselves to any occupation, and helping people in our way and how we can connect is so important. And the way that we do mortgage broking too is not in that transactional sense. I think it's more feminine again, because we have people who look at us and go, well, why would you do it like that? Why? It's just in and out, it's about the numbers. And we're like, it's all about the people.
It's totally about the people.
Yeah. And we're not here to like perpetually keep you in debt. We want to see you get out of it. We want to lift you up. We want to educate you. And I think the mortgage broking industry does do that very well.
Extremely.
It's
come a
not
long
just
way.
Us.
So from a mortgage broking perspective, over the last few years, it has gone through a massive transformation. 70% of Australians go through a mortgage broker now
versus going to the bank.
Going to a bank directly, for finance. So that is huge. Gosh, I remember when I first started, and I've been in banking and finance and, done this mortgage broking, for 30 odd years. And when I first started, those numbers, were very, very low, 20, 25. I remember when I worked in a major bank and, it got to 30, and they said that was like the strategy, 30% from brokers, 30% from the branch, and 30%, through digital ways. That was their goal, and they could not hold that 30% down, and it grew and grew and grew, and it got to 50, and then they were really quite concerned, and then it's just continued to grow, and now it's at 70%. So the reason it's moved is because brokers have to abide. A couple of years ago, there was a regulation that's been introduced to protect consumers, and that means it's called best interest duty. And what that means is if you come to a broker, they have to, by law, give you choices. They have to not just say we're going to this bank with this interest rate. They have to give you comparisons, and they have to why this is the best option for you.
And beyond that, they have to act in your best interest. They have to understand your situation, why you want what you need, and help provide and give you guidance, and make sure that the loan that they're giving you is in your best interest. And banks don't have this law. So legally, we have to act in your best interest. The banks do not have to. And in fact, I worked for a bank as well. And we had several products. So first of all, somebody walks in the front door, you're obviously only getting what that bank has on offer. But we were only selling one product. Even though we had several, there's only one. We'd only give you the one that had the fees. And I had a script. They gave me the words that I said to people to tell them why. So the banks don't have these same obligations that going to, and they don't have all the choices of all the other banks. They don't have to care about you, and they have KPIs, and they have to do sales and to hit targets.
That's right. And I also think people, basically the way brokers get paid is a contributor. So, it might be worth us talking a little bit about that to help people understand. So I think through, these podcasts and ongoing, if we can help you understand, some of the benefits and some of the facts, you can make your own, choices, basically. But the way brokers get paid is we get paid by the bank that we introduce the loan to. Now, most banks across Australia offer very similar commission. So there's a myth out there that brokers send a deal to a bank where they're getting the highest commission. It is just not reality. It is not how it works. The most important thing that brokers are trying to do is place you, because it's not just about the product and the interest rate that you're going to get. Mostly it's about your personal circumstances and the policies then where you might meet them to give you then your best choices. So
because every bank has got different rules. So if we think about your situation, you can't get a loan from maybe all the banks. Maybe there's only one or two. So it's your mortgage broker who knows. We have accreditations with all the banks, so we know their rules and guidelines, and we have access to all of that information to work out whether they'll lend you the money and how much you would qualify for. So we consider all of those things to choose where, or recommend, a recommendation.
I don't even know what the differences are in commission between all the banks. Not interested. It's just not front of mind, and they all are very similar. So basically,
there's no point sending you somewhere with the highest commission if the loan's never going to get approved, or also it's illegal for us to not act in your best interest.
And it's just not how it works. It really is trying to place a customer into the best product that meets their needs. That's really reality. And a mortgage broker, obviously, as Mel said, the key difference is has lots and lots of banks they can go to. I think our panel would be between 50 and 60 lenders, and that's just for home loans. So there's lots and lots of options out there, and a broker will be well-versed or more versed or being able to find out all those options available to you and then compare which options through software programs that they use. So coming back to how we're paid, so wherever we refer a loan to, they pay us what's called an upfront payment. So we introduce the loan, we do the work, we get an approval, and the bank gives, once it settles and draws down, which means that you've got the debt and the money, and now you have to make repayments. Then the bank give us a payment, and it's on average about 0.6% of the loan amount, but it is net of offset. What does that mean, Mel?
It means it's the balance that we only get paid on the balance you owe the bank. So if you have borrowed more money than what you needed and you haven't used that money yet, then we don't get paid on the total loan limit that we wrote you. So there's no benefit for us to recommend you taking out $1 million when you only need $500,000. Yeah. So we only get paid on the amount that you use. And they do recalculate that from time to time. So sometimes people need to take out more money and then they use it down the track. but it may mean that we may or may not get paid for that usage or uptake of that.
That's right.
Yeah.
And us putting always your best interests at heart, sometimes you might take out extra and you might sit it in your redraw, you know, for later or a rainy day or a future purpose or, you know, offset. So, yeah, we don't get paid on that amount. It's just the net debt amount that we get paid on.
But it also means that sometimes we've done the work and we don't get paid. You know, because if somebody doesn't use the money,
That's right.
then we have done all of, and people just think that we're being paid thousands of dollars. And it also, what happens is if you refinance your loan, within the first 2 years, we actually pay money back. So within the first 12 months, we pay any full commissions back. So if you only keep your loan or you change banks within 12 months, we've actually been paid nothing, and we pay the money back for the work that we did to get that original loan. So that's really important, and that's actually very hard for mortgage brokers to manage at the moment, because we've been in a environment where banks are offering cashback offers, so paying customers to actually change and switch banks all the time. So the brokers have to act in your best interest, and if it's in your best interest to move, they have to refinance you, but they're not being paid every single time that you. They're only essentially being paid once to do the work several times, and that has really impacted the mortgage broking industry. I would say financially over the last few years.
Definitely, yeah. I mean, you know, there are 30,000 mortgage brokers in Australia, but a lot of people, you know, just work home, you know, on their own, and you know, in some of these times, you know, it's pretty hard to make ends meet at all.
That's
whether
right.
or not you can do that.
And usually we're working with a client. The lead-in time from an inquiry to a settlement is 3 to 6 months. So the payday is a very long lead. So mortgage brokers need to have cash flow to be able to manage their business, and then be able to manage their cash flow as well. If those clawbacks is when we have to pay the money back to the banks is there. So there's definitely peaks and troughs. And it's not all. They're the things that we manage behind the scenes.
Yeah.
So to mitigate that,
Yeah.
we actually charge all of our clients a $600 application fee. So $660 when we lodge an application. It doesn't matter what it's for, so that we can provide our clients with a continuity of service, so that we've got more continuity of income to cover those events. But it also allows us to provide a consistent service.
Yeah.
So, our team, who have we got in our team?
Yeah, we've got Simone. I'm going to name them because we're people.
Yes.
We've got Simone, and we've got Lisa, and we've got Winner, and Miranda, and Angela, and Peter.
Yes.
And us.
Yes.
So a team of people that, you know, make everything go round and get things done. So there is a lot of, you know, stuff that has to happen behind the scenes, and it's really helpful, you know, to work with a wonderful team. So the other thing we haven't talked about is we also receive trail commission, and what trail commission is it's a percentage of your loan. And on average, I'm going to say it's 0.15%. So at the end of every month, all the loans that we've written, they're all added up, say times, it's not exact, each bank is different, but say 0.15% of that balance. And then we get, you know, times by 12 divided by that month, and we get a payment. We get an incremental payment.
Based on the accumulative balance of all the loans we've ever written, the current balance. So the bank at the end of the month will go, right, the current balance is this, we'll pay you a small amount for each loan, and we get and that gives us more continuity as well through, because we're getting a payment monthly as well based on our loans.
Yeah.
So we like to keep our customers too.
We do. That's incentive for brokers and your broker to look after you and to give you good service, so you keep coming back to you, obviously.
Yeah, we love in broker terms we call it our loan book, and so that's full of all the clients that we've ever served, and we love, like, the people who are in there are important to us. So we want them filled with the most amazing people, and if you're in there, you're the most amazing people. We love talking to them and
being part of their money lives, because this is where we discovered through, mortgage broking has been, our core work, through much of our life and through banks and then mortgage broking. And there's just by saying that, mortgage brokers have many of them have lots of experience. You will get some new to industry, but sometimes they're people that have worked in finance and have, landed in mortgage broking. But this is why we've developed financial wellbeing, as an added on service. And it's really, really important to us because when you work with people around loans, you have to be really vulnerable and you have to give all your information to a mortgage broker. And you really start to trust them, and they're doing the right thing by you. You're going to really build a relationship. So what happens, and we've found over time, is people want to talk about their money, and you can see just by the chats and how they come and ask for advice and what I should do. Like it is a true money relationship, probably similar in the old days to what you'd have with an accountant or potentially a financial planner. But mortgage brokers are really in that remit because they work with people and their loan needs.
A duty of care to these people who are sharing their stories with us. And that's what I found it hard to be a transactional mortgage broker when you're just doing mortgage broking, because there's no space or time in that to help people in a really substantial way. And that's why we started the Money Collective 4 years ago. Really, this business is to solve for that and to add in that additional service of the premium one-on-one coaching for people.
That's right. And help people understand all the things that they can do to uplift their financial well-being. Because that's, obviously more impactful, more purposeful. We can really, make a difference with our clients over time. And that is really, why we have introduced our administration fee. So we can really serve the person. We don't buy business from different referrers. We don't give any cuts away to anybody else. We just want to purely serve the person that we're working with and make sure it's always best interests at heart. There's no conflicts with anybody else, in other services. So I think that's also a really important thing. So we don't pay commission to any other source. We don't take commission from any other people that refer us business.
And this is a Money Collective thing. So that's not to say other businesses don't do that or it's against the law to do that. We have just decided as a business not to do that so that we're not tainted. Because if for example, if an accountant is giving us we call them leads, which is terrible. A new client, comes our way. So because it becomes very transactional then, because then you're just trying to keep the accountant happy, and look after their client and make sure you do a deal for them rather than purely and only serve the best interest of that person. Because then we would have, if we were accepting commissions, we would have two clients really. We would have the customer we're trying to do a home loan for and the accountant who we're paying as well.
So they'll give us more business, more new clients.
Because so if we look after the client they've given us, are they going to give us more after that? So we really don't want to be playing in that space.
That's right. And for you, what value it is really making sure that, if you're working with a broker, ask those questions of a broker, like, are they, if your accountant, for example, has referred you to this broker, what are they paying the accountant for that? Are they serving your interests or the accountant's interests? Because you want them working for you.
And because it does taint the relationship legally now, it has to all be disclosed. So it will be in the paperwork that's sent out to you too.
Should be.
Yeah. That's right.
Yeah, and I would, and I touched on before, I'd say the value of, so if I can summarise, the value of brokers, check their background, their knowledge and how much you've done it for sure, but you can get some very experienced and knowledgeable and lateral thinking brokers. So that's really key. So experience, I'd say number one. The choice in banks is number two, and we've talked about already. By law, they have to do the right thing by you. Otherwise, you've got recourse. So that is
ongoing
standards.
Service. Like I just love that people can keep coming back to us and go, we've got the same person, because we're a small business. So it's not like you're going to go back into the bank and it's a different staff member or a different, somebody who doesn't know your story. And that's what I think motivates me to stay in here. Like really helping and seeing people's stories, helping people buy their first homes. Like that might take them 3 or 4 years to actually get them in a position, right? Especially self-employed people. And then watch them have children and, well, not literally. But and buy their second house, buy an investment property. Like those stories are amazing.
They are, and I really feel part of their journey.
Knowing how much, when people say to me, Mel, I couldn't have done this without you. This is amazing. Feels good, doesn't it? Thank you.
Yeah, that's right. And being that person that somebody leans on makes me feel good. And it's definitely not, because our philosophy is we wouldn't tell anybody what to do, but we'll help them, provide the information to help them make the decisions. So it is. And like you said, knowing that people, it's like the old-fashioned bank manager years ago, where somebody knows your risk tolerance, what you care about, all the things. So, once you've done that once, it makes those future transactions and future things you need much easier.
And being honest with your mortgage broker makes our job so much easier. So if you come and put everything on the table, don't hide anything that you're worried about, because it will come out in the end. But if you're upfront about it, then we can go to the right solution the first time.
That's rather than... And we're in your court, Yeah,
absolutely. And I think that's the risk. You go to a bank and you're like, I know that people just tell them what they want to hear because it's going to get their loan approved or whatever, which may or may not work out for you. But by going to a mortgage broker, you can really be honest about somebody helping you through whatever the situation is to get to the right outcome. Yeah,
that's right. I can rate it. And now more and more brokers are also, looking at this financial education and, things like that. So, really looking at it more holistically than just doing a loan anyway. So,
so if you haven't used a mortgage broker before, then call us.
Yeah. We'd love to hear from you.
Or any mortgage broker that's amazing like us.
Definitely. That's right.
Or call us.
All right. Well, the question of the day is, should I take out a novated lease? I had a client this week, an existing customer of mine actually, contacted me and said, we need a new car. Should I take out a novated lease? And how would you tackle that, Mel?
Wow. That's a loaded question. So can they afford it would be the best thing. But first question that I would ask, because I think people think novated leases are some magical way of buying a car that's going to be cheap or not cost them anything, because if it's salary packaged through your employer...
Actually, I'm going to stop you just for a minute. What is a novated lease?
Oh, great question. A novated lease is buying a car through a novated lease company, usually through salary packaging at work through your employer. So they will provide you a car. You sign up for the lease. You get to choose a car, and then that car will come with costs. And the novated lease company will manage the entire running cost of the car, including the insurances, the petrol costs. So you'll get a fuel card, the maintenance, the servicing on the car. And the finance of the car, so the actual cost of the car. So there'll be two components in a novated lease. The first component will be the running costs of the vehicle, which they estimate out, which you need to pay monthly, and also the financing cost of the car, which you pay together monthly as well. So they add it all up and there's a monthly cost. And then some of that is you can pay from your tax-free salary. So they'll work out that a percentage can be paid tax-free before you pay tax on your salary, and the rest comes out of your after-tax salary. All right. So when people hear the words tax-free, people, I don't know, go bonkers and think that they're getting an awesome deal, that they're getting something for free.
They're not. They're still paying interest on the car.
It does my head in. Like, seriously, you're not getting anything for free and you're paying for the entire thing, and these people are making money out of you. Okay? And it might be easy and convenient because you think you're doing it through work and you're getting something tax-free. But seriously, the answer that I would say going back originally is, can you afford it?
That's right. And so the very first thing I did with these clients, I sent them a spending plan template, which is on our website, and understand your income minus your expenses now. So what's the position now? And then you can work out what's left over in your cash flow, and then what actually have you got to work with. That's the number one thing to start with. Can I afford the car? And then obviously the next thing is you can also finance cars in different ways, not just a novated lease.
Yes.
So the second thing with these people, though, they had some savings in the bank. So having savings in the bank, you could use your savings. So they'd picked out a car they liked, and they didn't quite have enough savings, and they didn't want to use all their savings because then they wouldn't have any emergency money. So that made sense. So where we landed, because what type of finance you choose is also a good question around that, because if you're financing the whole car, you might get an interest rate deal that will look better than if you want to put some money in and only finance part. The same novated lease is possibly not the best answer when you're putting some of your money in. And if you can put any money against a personal car that you're using for personal use, means you're going to pay less interest. So that is always a good thing.
And your repayments will be less.
Yeah. Correct. So we did part. So we ruled out, because we were going to put part in, we ruled out novated lease in that case. And then we were looking at what is the cheapest way to fund the difference. So because it was part and it wasn't the whole of the car, because the car yards, or what we call asset finance companies, will finance the loan and take a charge over the vehicle.
So this is different to a novated lease. So you're just talking about getting
a car loan.
Getting a car loan.
Yeah. So you can do that through car finance companies. And then the other way is to go to a bank and ask for a personal loan.
That's it. And so the bank can do it, or an asset company. But at the end of the day, you're paying the loan repayments, and then you are responsible for your own running and maintenance. You own the car is in your name. You've got a loan that you have to pay back, and you pay for all the registration and maintenance of the car yourself, because it's your car. But in a novated lease, you don't own the car. The leasing company owns the car until you decide what happens, because that's a whole nother thing. What happens at the end of the lease?
You've got to know those things too.
Because usually there's a balloon payment on there too. So I was looking at one yesterday, and the total running cost of the vehicle was $1,500 a month. They're paying the leasing company, and there's still a balloon payment at the end. So what the leasing company wants you to do is change your car over and enter into another lease. That's why they do it.
Exactly. So you've got to look at all your terms and conditions.
What are you really signing up for?
The scenario.
Beyond the tax-free portion.
That's right. And even do the number crunching. So I often say to people from the cash flow, compare your repayments. So apples with apples. In car finance, the regulation's not quite the same as home finance. So,
there is no regulation. It's unregulated.
So look at your repayments. So if you're comparing...
I'm pausing here on unregulated. They don't need to tell you this. There's not laws. We've just, in this podcast, told you about best interest duty, and mortgage broking is one of the most heavily regulated industries. We can't say boo without writing it down.
Definitely.
Car lending is unregulated.
Yeah.
There are some loose rules.
Yeah, it's a lot looser.
They don't, and working out whether you can afford the car is generally not part of the process of lending you the money.
Yeah. So but you do want to do your due diligence and see which best style of finance, or a combination of finance and savings, or all savings, is the best option for you. And you need to understand the terms and conditions of what you're trying to use. So novated lease, the second thing you would do after you understand your money is you would go and understand the terms and rules, and then you would compare each option by looking at repayments, and also doing your number crunching on what you might be saving, and a little bit of tax. There could be some tax saving.
This might be beyond you, right?
It's very complicated. Can you tell?
And we love this stuff. Okay, you might need to call us or somebody who knows about this stuff to get advice from somebody who's actually going to tell you the truth. And I would not be relying on that being the car dealership.
No, and it's not one size fits all. Your personal situation is
really not being nice
tailored.
to car dealerships in this episode.
No. That's because maybe experiences haven't been great.
I think I've shared a previous experience of that car deal, the last car we bought. Anyway.
Yes.
We like talking about that.
Yeah, that's
it's very interesting.
So it is complex. You need to do some work.
Do your numbers. Don't sign up to thinking it's going to be all shiny and rosy, because everything has a consequence.
And now we are at the end.
last episode for the season. So episode 8, it's been a short one but a good one. We've loved it.
Yeah, I hope you love it as much.
And we're already working out what we're doing for season 2, but we're going to have a short break and then come back to you. So yeah, stay tuned on our socials. Download any of the tools and resources that we've got available. Reach out, message us. We love to hear from you.
Feedback is a gift, so we'd love to hear your thoughts, what you want to hear about, what you liked, what you haven't liked.
And if you have a question, maybe we can
please, write your questions.
Incorporate them into season 2.
Yeah, that's right. Thanks for listening. If you haven't listened to all of them, but you liked what you've heard in some of them or this one, go back and listen to some of the others.
Cool. All right. Thanks, guys.
See you next time.
Bye.
Bye. At The Money Collective, we provide financial wellbeing, premium coaching, mortgage broking and workplace financial wellbeing programs, which we couldn't do without the seamless support of our fabulous team.
If you'd like to find out more, head to themoneycollective.com.au or our socials to take action and engage our services. In our Facebook group, join the conversation and help us break down the taboo around money.
All content in this podcast is for educational purposes only and is general in nature. For tailored personal advice, please seek out a professional.